This morning a cloudy start, but this will soon give way to sunny spells throughout most of the UK. Temperatures will range from 15 to 19 degrees Celsius.
Well, so far this year, the place to find value is arguably in the small caps. The index has outperformed its big brother, the FTSE 100, but talk of a stock market correction is still rampant. So is it time to back the defences or still look for value? We're going to look at two of Britain's smaller companies, Invesco English and International Trust, and Games Workshop. I'm joined by Andy Crossley, global partner from Invesco Asset Management. Small caps, before we go on to the two individual stocks, would you go for the small caps in the sense that there is still value to be found, or is this talk of a stock market correction a very, very large cause for concern in the sense of a very large cloud hanging over the markets?
Yeah, I think clearly if there is a correction, then all shares are likely to fall. However, because small companies are so much cheaper than large companies...
Surely more at risk, aren't they?
Well, we don't believe so. And we believe that fundamentally it's all about valuations, with small companies that are growing so much more quickly than large companies on a discount to the market at the end of this year of around 25%. They continue to represent good value and are likely to outperform whether the market crashes or not.
So do you think, obviously, investors should go for small caps even now?
Yes, I mean, we would recommend investors to be overweight in UK small caps on valuation grounds and also on news flow grounds. Over the next 6 months, you are going to get statements from small companies who will be talking about current trading. When they compare the trading today in relatively buoyant conditions with the trading in the second half of last year, which was the trough in terms of economic activity, the like-for-likes are going to look really very good, and that will be supportive of share prices.
Now, Invesco English and International Trust, your own company in a sense.
Yeah, I manage...
You're actually head of the team.
Yeah, I manage this investment trust.
So looking at this 4-year chart, you've seen the stock market, well, the share itself, collapse back in October.
When confidence collapsed last year, John, I mean, because this trust is relatively highly geared, people sold it. However, the recovery this year has been pretty quick, and the trust remains now, I think, the top performing trust in its sector over 5 years, and it's the only one that's AAA rated by Standard & Poor's Fund Research.
It's risen by 35% so far this year, currently about £1.70.
Yeah.
But it did fall, and if there is a stock market correction, it'll happen again, surely?
We don't think so, because it's on an 18% discount today, which gives you some comfort in terms of a falling market. But sure, if you believe the market is going to collapse, we wouldn't recommend you buy this stock.
It's your team, isn't it?
It's just my team, yes.
So you are backing it for that reason?
Yeah, I mean, I bought some shares personally in this trust about 6 weeks ago.
Okay, now looking at Games Workshop, interesting company in the sense that it is it's the biggest maker of these war game figures.
Yeah, it's the dominant producer of tabletop wargaming systems, dominates the market.
So dragons and little soldiers.
Yeah, there's basically two formats. There's a medieval one, which is your orcs, your elves, called Warhammer, and then there's a futuristic one, which is, you know, your space marines and those sorts of characters, which is set in the year 40,000, is called 40k. This is a great growth business. It's more than trebled in size in the last 5 years. It had a bit of a hiccup, which we put down to growing pains, but it's now introduced new systems. It's appointed a new finance director called Michael Serwin, who is putting in place proper systems to enable this business to continue to grow, and Chris Prentice has taken over as chief executive. So we believe it's firmly back on a growth track, and therefore to be able to buy this business on a prospective multiple of under 14 times is, we think, a pretty good opportunity.
Isn't this a bit of a fad or trend of the 80s?
No,
85, 84, when it started coming out into the...
Yeah, I mean, this company has existed in the UK for the last 20 years and is still growing. Last year, for example...
And it's still a growing trend, and it's still there with the market.
Yeah, its shops showed a like-for-like sales growth of 11% in the UK last year. Now, 60% of its sales are overseas. About half of those are in the States, half of those are in continental Europe. And if it can begin to achieve the same sort of penetration over there as it has here, the potential is vast. It believes it's only a quarter of its potential in Germany and only a fifth of its potential in the States. So we believe the future really looks very rosy for Games Workshop.
Looking at the chart, because it's actually risen 80 pence only in the last week or so. What's behind that rise?
Yeah, it came out with results last week that were ahead of expectations, and I think what a number of investors were doing were waiting to make sure that the growth story was back online, and now clearly it is. People have been buying it again.
So £4.60 for that share price now. Credit Lyonnais, the house broker, have given a 20% upside on that.
Yeah,
Do you agree with that?
we think they're being somewhat conservative. We think that their estimates are probably on the low side, and we think that they believe it should trade on a market multiple less than 20%. We believe that it can easily sustain a market multiple, which would give it a share price of nearly £6.
Okay, many thanks for coming in. Of course, Games Workshop, £4.60, and of course, Invesco, English and International Trust. Thanks for coming in. Andy Crossley.
Great, thank you, John.
Time now to go over to